my call sign is always we're live, so I'm going to stick with that even though we're not. So we're live at Defcon. I have Daniel Kim, who gave the opening talk today. You want to do a quick intro of yourself? I think a lot of people in the Monero community already know you. You did a couple of great interviews and videos at other locations, other conferences. You certainly have a very strong and clear understanding of the value proposition of what Monero is, and you communicate that in a very nice way. So if you want to just give a quick intro, and we'll get into it.
Sure. Yeah. Thanks. I'm glad to be joining the Monero Talk Club here. I've watched a lot of your episodes, if not all.
Hold that nice and close.
Oh.
So I want to make sure we get you.
Okay. Is that better? All right. Yeah. So I'm Daniel Kim. I'm CEO and founder of Sweetwater Digital Asset Consulting, which is a consultancy that seeks to give custom advice for institutional investors, trusts, family offices who are looking to get into crypto but need good advice. Because, of course, we're in a dot-com sort of era when it comes to cryptocurrency where, stupid idea plus decentralized Nakamoto consensus equals, hot new coin. And so I seek to help these traditional investors steer clear of the many substandard projects out there. My background is somewhat unique. I've done a number of things that give me sort of a broad experience. My educational background's I'm a physics PhD. I spent 10 years at Harvard studying physics. And then I spent 10 years in the nonprofit sector, initially as a symphony orchestra musician. I played the violin and later keyboard in the Syracuse Symphony Orchestra. And concurrently with that, I became a medical school professor, helping cancer patients getting radiation as a medical physicist. So I was board certified. As far as my interests in medicine, and it actually has sort of a hacker sort of aspect to it, is that I patented a device that actually did packet sniffing of medical data being transmitted to medical linear accelerators, so that this packet sniffed intercepted data could be reconstructed and used to determine a calculation of whether the radiation treatment that is about to be delivered to a patient is sensible or not. So basically it was a data quality, data integrity double check based on wiretapped information. So yeah, so that's, I've always been interested in computer security, computer sorts of problems. One of my early childhood memories was, putting in 8K RAM chips into an original IBM PC with my father. So yeah, it's been always a part of my life. And I happened to be one of the early people to read the Nakamoto white paper. But at the time, like so many people, I just kind of dismissed it as a geek project. But eventually kind of fell down the rabbit hole and became very interested in decentralized consensus, and I think what the killer app for it is, which is money. And so there are lots of projects that purport to add things other than an accounting system onto a blockchain. I've never really, I think those are interesting, but maybe like 10 years from now interesting, because like if blockchain can't figure out a good way to do money, then it just seems like a lost cause. And on that question, is there a good implementation of money? I think that Monero comes the closest to it by far, because the problem with a transparent blockchain like Bitcoin is that it transmits reputation as well as value. And so that just, it's a chilling effect on society, especially I would say for those people who are squeaky clean, which is counterintuitive and opposite to the usual uninformed mantra that only the unsavory elements of society will gravitate to a project like Monero, which is fungible. But it's actually the squeaky clean people who have pristine reputations and don't want to risk those reputations by accidentally accepting value from somebody who, unbeknownst to them, is under suspicion for whatever. And that's what's happening in Bitcoin, because Bitcoin is transparent and a history of transactions is forever etched into the collective memory of humanity through this blockchain, which has insane amounts of hash power, behind it, which eliminates any sort of possibility of error, right? So, so I think briefly that's why I think the Monero project is valuable, and as a kind of old school OG type within crypto, I try to transmit some of that worldview onto the other investors that I work with. Oh, sorry, I got sidetracked talking about my background. So after the 10 years in the symphony orchestra and as a med school professor, I signed up for the executive MBA at Yale. And there my finance professor kind of poached me to come work for his hedge fund. So I ended up being director of research at a equity manager that manages about $1 billion. And in that process became familiar with basically the language, the culture of professional money management. And so as somebody who feels comfortable both in a t-shirt here at Defcon, wearing a geeky badge, but I'm equally at home wearing a suit and giving keynotes at investment conferences as well. So I kind of bridge those two communities.
I have a lot of questions. That was a lot. So I guess let's talk about the investment thing. So who are these people that you're managing? These are like high wealth individuals I imagine, right? These are kind of whales, big fish.
Well, what we call whales in crypto land are not necessarily whales in the bigger world, right? I mean, it's crypto is still small, but yeah, that's my target clientele is I'd say family offices, high net worth, the higher end of high net worth, but also institutional investors like pension funds and the like, who are interested in looking at cryptocurrency, but just need good advice.
So are we seeing real interest then in Monero? So when you're talking to these people and you're explaining the value proposition of cryptocurrency and how the killer app is money, are people understanding that and seeing the value in it and kind of making that measurement in their head and saying, are they understanding all the things you understand? And that, all right, well, if the value proposition is money, which one of these does money the best? Oh, it looks like actually Monero is the one that does it the best. Obviously, I understand that. You understand that. Is that getting conveyed to this audience?
Well, it's an uphill battle, right? I mean, it's an uphill battle even for people who are already in crypto. But I think there's more openness to the idea of privacy and money from this kind of segment of investors. There's, like, for example, one reason that fungibility and privacy are important in cryptocurrency or any currency is the ability of businesses to preserve their trade secrets. So nobody thinks that it's nefarious if there's if Coca-Cola wants to keep secret its recipe. Like, no one bats an eye at that. No one associates that with anything illicit. And the same thing would also extend, I would say, to the relationships that companies have with their suppliers, their customers. If you have a completely transparent blockchain, you can basically glean information from your competitors that is, again, falls under the category of trade secrets. In the finance world, the composition of portfolios is actually closely held as like a trade secret. Like asset managers do not want to divulge kind of the current status of their portfolio or what the decision process is. Of course, they will explain this at a high level to clients because clients will demand to know how the sausage is made. But generally, this falls under the category of like information that you want to treat as your secret sauce. And so for something like that to exist on Bitcoin, there's sort of a natural aversion, I would say, to something like that. And I think there's a mature understanding, I think, of the value of privacy.
Very cool. Yeah, and I guess people are because I mean a lot of people you ask today they think Bitcoin is anonymous. That still hasn't even been conveyed yet. They just assume that that's what it is. I mean, yeah, the big picture way I look at things is just I see this stuff as basically just a communication protocol, but it's for communicating value digitally. And the most efficient way to do that would be in a way where in the protocol, every unit equals every other unit. Otherwise, it's no longer efficient and fluid. And I feel like the one that does that most efficiently will allow an economy that runs on it to run in the most efficient manner, right? Because now it could fluidly flow from person to person without kind of this friction of being able to essentially mark coins and blacklist coins. That friction disappears with when you have a currency like Monero, where you can't blacklist things.
Yeah, sure. And just to add to that, the costs of defending yourself from a unjust accusation due to the fact of inadvertently accepting coins that have been earmarked as suspicious is that there's an information asymmetry. In other words, the little guy does not have the 6 figures a year to pay the coin analysis companies for their full copy of the latest and greatest assessment of who's a good guy and who's a bad guy, right? Like that is a luxury that the powerful can now afford. And so you have a situation where you have powerful institutions have the best knowledge, you have the little guy who's relatively blind, and the little guy is subject to the penalties of just stepping on a random landmine that they had no idea was there. There's another issue that I mentioned in my talk, I think that I've yet to hear it mentioned in a cryptocurrency sort of setting, and this is the 1970 paper by George Akerlof on the used car market. And so just to give a summary of what that says, if you think about used car sellers, they're in 2 categories. There's one category of used car sellers who have taken good care of their car. They've done all the maintenance, they changed the oil, they've done all that, and now they want to sell their used car. Now think of another group. This is kind of like the scammy group. Like these are the ones who make sure that the paint job looks good, but the engine has big problems, or it was a flood vehicle, that kind of thing, right? Now let's say you have a market for used cars in which the knowledge of whether a car is a good one or a lemon is not apparent. Like they both have shiny paint jobs. Now look at this situation from the point of view of a buyer of the used car. They're going to basically look at this situation as follows. Okay, I have an assortment of used cars available for me to buy, but I'm blind as to which are the good ones and which are the lemons. Therefore, since I would pay a higher price for a car that I knew was good, and I'm going to pay less money for a car that I know is a lemon, but because I'm ignorant, I'm going to now hedge my bet. If I think that there's a 50% probability that I'm going to get a lemon, then the price I'm willing to pay is somewhere in the middle of the good car price and the lemon price, right? So basically the buyer who is self-aware of his own ignorance in this situation is going to basically have a lower willingness to pay for the product due to that ignorance. So now let's carry on this kind of feedback loop to the other side. Now you have the sellers. Again, we have a lemon seller and we have a good, like a cream puff seller. I think that's the word for a good used car in the used car parlance. They see that the buyers of the used cars are offering a middling price. So now they're going to react predictably. The sellers of the lemons, well, they're good because their car wasn't worth that much. They're happy that the suckers out there are offering an in-between price. They can profit. But the people with the good used cars, they are going to be basically insulted, right? They're taking a haircut because of this ignorance, and as a result, they are going to exit the market. So when you do this feedback loop, what you end up with is that all the good sellers leave, and all you're left with is the scammy, undesirable sellers. So now,
do you see that translating into? Translating into the Bitcoin itself?
Yeah, exactly. And the other thing I just wanted to say before moving into Bitcoin is that this is not some obscure paper. Akerlof won the Nobel Prize in Economics in 2001, largely, because of this paper and others. So yeah, the key takeaway is that whenever you have a market in which there's a good that has variation in quality level, and you have a buying side that is ignorant of the history of the product, then what's going to happen is that all the good people are going to leave that system, and that's what's happening in Bitcoin. So one sign of that is that there's already evidence that basically virgin Bitcoin that are freshly mined out of Chinese miners are being sold for a higher price than secondary markets, secondary Bitcoin that's been pre-used. In other words, there's a different price for new Bitcoin versus used Bitcoin, just like in the car market, because the problem with the used cars, the used Bitcoin, is that you really don't know if you're going to pick up one of these lemons, right? And so the natural inclination is that the good guys are going to leave that system. It's totally counterintuitive, because I think for those people who are financially invested in Bitcoin and have an interest in shunting off all the undesirable elements of society into some other coin like Monero, and I think we're the brunt of that, is that that's going to be the accusation, is that Monero, that's where all the scammy people, the people who you don't want in your coin going. Well, this research, this insight from economics would suggest that it's the opposite. It's the squeaky clean people who are going to run away from all the undesirables in the transparent coin, because they have pristine reputations to uphold, and it's not worth the risk for them to basically have their pristine reputations contaminated by other people in that network.
That's a super interesting way of looking at it and applying that theory. I'm gonna have to read that paper myself. So if you were to talk to a Bitcoin maximalist, they would tell you that Bitcoin's going to win because it's kind of it's digital gold. It's the most strongest form of money we have, and because of that, all money is going to essentially get eaten up by Bitcoin, and everyone's going to converge into Bitcoin. But you're using this kind of other theory that people are going to be leaving Bitcoin because of its lack of fungibility, and it becomes inefficient. That's a really interesting way of looking at things. So where do you ultimately how do you see things playing out? Because once again, a Bitcoin maximalist will say, well, depending on who you ask and what day, they'll either say, well, it's okay, we'll add those things to the second layer. Things will become private and fungible on the second layer. Or they may say, you know what, because I've heard that the tune also kind of change, where it's like, well, actually, is it the worst thing that it's not fungible? Is that even really the worst thing? Maybe it's good because now it's governments are more accepting of it because they know it's a transparent blockchain, so that they like that idea of kind of being able to surveil transactions, right? I mean, obviously, it's kind of a wet dream for large governments. So how do you see it playing out? Do you think Monero, seemingly being a better technology and a truer form of digital money, do you see it ultimately, because of its the way it's built, the cream will rise to the top? Or do we kind of end up with a Bitcoin solution just because it's good enough, and good enough ends up winning the day, even though it's not perfect digital cash? How do you ultimately see things playing out?
Yeah, that's the big question, right? So first, I would say that Bitcoin maximalism has a few assumptions behind it. One of them is the idea that any worthy innovation that comes to be in a competing project will get absorbed by Bitcoin. And I think in the case of fungibility, it's a disruptive enough idea to the original social construct or social contract that it's far from obvious that it would get picked up. If it would have gotten picked up, it probably would have already. Like the Satoshi white paper was written with radical transparency, and I think that, just my personal speculation, but Satoshi was putting together some very disparate elements in cryptography, in game theory, distributed networks, and Satoshi could not have known that the project would succeed, or on a technical level. Set aside the societal level, but just the technical level. It's hard to know this stuff when your idea consists of needing a broadly distributed network, right? So he needed that early set of geeks in 2009 to be kicking the tires, trying to double spend, sending Bitcoin to each other when it had zero value, and basically trying to hack the system. And to do that, you need that transparency. Like if you impose an encryption layer on the transactions that are in the blockchain, that just makes it that much more of a pain if you're an early tester to do that. So that radical transparency, I think, was necessary to get initial buy-in from that initial circle of geeks, right? It served its purpose, but now, fast forward 10 years later, now we know that Nakamoto consensus works, and we're in a different context now than back then. Now we have, actual value being, changing hands. We have a surveillance capitalism state in which, both governments and companies have a disturbing amount of information on everybody, to being used basically against the little guy, to the detriment of their freedom. And I'm not talking about bad guys. I'm not defending bad guys. I'm talking about squeaky clean people who just want to live their life without, pervasive surveillance. I think it's a state of being that used to be kind of common sense, that we shouldn't be spying on Americans. We shouldn't have this vast Big Brother sort of apparatus, having a chilling effect on the interactions of people. So for Bitcoin maximalism, I think that the idea that fungibility will be absorbed into Bitcoin, I think it's highly unrealistic. Also, these are engineering projects. They're not science projects. They're engineering, right? So I think, the priority order of features to build into a project is basically the output of the people building it. It's like a community function. If you have a community that thinks that fungibility is not important, they're not going to put fungibility in their end result. And so I think that's what is happening. It's like in Bitcoin, it's always 18 months away. There are a lot of things in Bitcoin that are 18 months. Like Lightning's been 18 months away for 5 years now. So, there's this kicking the can down the road thing of, yeah, it's important, but we'll get to it after this and this and this, and also it's probably going to be contentious because, there are a bunch of Bitcoin people who bought into this social contract that their understanding is that they have a transparent coin. They built a business around that feature of Bitcoin being transparent for whatever reason, and they're going to be super upset if it gets built in. I just think that it's basically a fundamental engineering decision whether or not to elect to put in the layers of encryption and sophistication that are necessary to synthesize fungibility out of a digital asset, which at a base level is kind of crazy hard, right? Because at the end of the day, we're talking about bits, we're talking about ones and zeros. How opposite of fungible could you get? One is not zero, and no matter how you spin it, we're talking about systems that have scarcity of digital information as their basis of operation. Digital information is ones and zeros. You can tell a string of ones and zeros from another string of ones and zeros. It's the most trivial thing. So this is another thing I think that people kind of underestimate the difficulty of actually, putting together a system of cryptography that can deliver a form of fungibility. So to another point that you made about digital gold. Gold, if you flip a gold bar on its around, you don't see a nice neat table, of every single person who owned that brick of gold, for the history of its existence. That it's a laughable idea, and yet, honestly, I can't really understand how Bitcoin maximalists can claim that they have a form of digital gold when, you know, that's exactly how Bitcoin works. It's like it's like a dollar bill that you flip over, and there's a nice, neat table that's etched into it. It's not just like written there; it's etched with the, with the, you know, how many zeros of hash power that they always brag about having. It's basically bragging that like your rope is so impenetrable that it gets used to hang people. Right. So yeah, I kind of don't understand this Bitcoin is digital gold where Monero fulfills that analogy so much better. And so this was one of the charts that I showed in my presentation. It's a long-term chart that starts at 2009, so basically the history of all crypto until the end of last month. And what it does is it plots the value of all the Bitcoin in the world divided by all the above ground gold in the world for the last 10 years. So there's a number of things there. There's how much gold was there historically, what was the price of gold historically, how much Bitcoin existed. So you have the emission curves, you have the prices, and you crunch the numbers, and you get bottom line result that all of the Bitcoin in the world is worth about 2% of all the gold in the world. Whereas from Monero, today's ratio is something like 0.02%. So from a investment thesis point of view, you have a situation in which kind of an inferior approximation of gold is worth 100 times the technically superior implementation of the gold, which is kind of in a nutshell the upside thesis for Monero.
Yeah, I personally don't even like to say it on this show because I just see it as obviously a great investment opportunity for Monero, given that what we understand and know about it. And obviously this is our opinions, which we share, that we think it's a more pure form of digital cash, which makes it a great opportunity to invest in, given the way the market currently is, where it obviously seems to be undervaluing it greatly. So at what point do you think? Oh, and I also thought that was great the way your explanation of Bitcoin lacks fungibility because it was designed that way initially because it was too abstract of an idea for people to trust it.
Yes.
So Monero's kind of a second layer of abstraction that we're now capable of understanding,
Right.
given that we've tested Bitcoin, we see it works.
Right.
Now we could encrypt the blockchain, obfuscate the blockchain, still understand that it's still functioning underneath.
Yeah.
But now, the values aren't being shown. I mean, because it's just another layer of abstraction, and I do think that's a very good point. I wonder if Satoshi would have added confidential transactions if it existed at the time, or if he would have opted not to, given the reasons you're saying. So at what point do you think the market starts to understand these things, or these smart investors, these people that obviously have a lot of money, they're intelligent people that you're talking to on a daily basis, when do they start to really understand this arena and begin to understand the value proposition of these things? We understand it. Where's that disconnect? Obviously, there's a lot of momentum behind Bitcoin because people are literally invested in it every time, it's good. There's a lot of cognitive dissonance there, and a lot to be lost if people start to realize that Bitcoin isn't digital gold. So you're fighting that trend, but at what point do you see the trend kind of shifting, and people really starting to understand and kind of starting to appropriately value things in this arena?
Yeah. You're kind of describing the pain of contrarian investing. Right, and so this is when you're going against the herd, I think there's no substitute for just a very deep, fundamental understanding of what your thesis is, because it can, like that famous saying, the markets can stay irrational for longer than you can stay solvent. Yeah, I had a few thoughts on that, but now I'm blanking out.
Is it just a matter of time? I mean, we're looking at, I'm kind of re-asking that same question. I mean, we're understanding this. We understand the value. We understand the mechanics. You know, um, of what is the disconnect there, and what do we have to overcome for that disconnect to
Right.
be solved?
Okay, so I'm remembering a couple things now. So we guys who have been down the rabbit hole for a long time, I think we tend to discount how ignorant we all were before we went through that journey, and how much time it took us. So it's just a intrinsically difficult topic for people to get their heads around. People, especially in traditional finance, tend to be pretty busy already doing what they've already been paid to do. And so, I think there's also a humility that's needed on the part of people who have done, investing professionally, because the vast majority have completely missed this 1 millionx appreciation of Bitcoin in the last 10 years, when it went from a fraction of a penny to right now it's like just over $10,000 per Bitcoin. So that literal million X got missed by pretty much everyone in traditional finance. Like you kind of have to feel for them. It's like your choices are: either admit that you totally, like, you're the smart money but you missed this, or there's got to be some problem with there's got to be something scammy or something, and you don't even have to necessarily understand it to level accusations against it. But it's like there's something about the ego that refuses to admit that, I blew it on this one. So I think that's part of it, is that, there's an inclination for the incumbent industry to dig in its heels. But I think that's changing. I think, especially, I would say on the trust and family office side, maybe more so than the like the pension fund side, where they have more it's more regimented. Like the set of assets that they can or cannot invest in, it's more like legally entrenched. Whereas, the family fortune of a CEO that took a company public doing something totally unrelated to crypto, they have much more free reign to invest as they see fit. And they already have kind of trust structures that are conducive, in some cases, to crypto ownership. So yeah, one of the things that I've done in my consultancy work is to seek out some reputable partners in the trust world who are in jurisdictions that are compatible with crypto ownership. And when I say that, I mean proper crypto ownership in the sense of self-custody of private keys. And also are trust companies that are kind of receptive to the idea of having trust funds be put into cryptocurrency. So that's been an exciting thing, because it's, we're used to dealing with crypto people all the time and being sort of one of the, I don't know, meritorious but quiet projects within crypto. But then there's like a whole another like universe out there of trust companies and estate planners, and that whole branch of law that I'm raising my profile in that world too. And that's been a lot of fun, because these are sort of pioneering techniques that combine crypto and trust law.
Very cool. Well, I appreciate all the candid, genuine responses to my questions, and I think you're a great attribute to the Monero community. We could use that guy has the ability of coming to Defcon, but also, like you said, putting on a suit and being in the rooms with those people as well. So I appreciate all the work you're doing. Thank you, Dr. Kim. It's been a great interview. I'm hoping maybe we could talk again on the show sometime. Sure. And yeah, enjoy. Anything else you want to say? Anything else you want to leave us with?
No,
anything about Defcon itself, or?
Yeah, I said this in the talk too, that I think if Defcon were to get together and make a cryptocurrency, I think it'd look a lot like Monero, because you have a lot of the same kind of core tenets of the community, of like a emphasis on freedom of bits, freedom of data, emphasis on free and open source software, an aversion to kind of overbearing surveillance states, and also a kind of shared tendency to be misportrayed by the popular media. Like Defcon has sort of a reputation of being, it's where all the bad hackers go, and if you come here, it's like it's 20,000 people. I mean, they're not, first of all, no, it just doesn't make sense if you actually kind of come here and walk around. It is what it kind of says it is, which is like a bunch of computer geeks getting together and just sharing information on stuff that's cool. And if they are finding exploits and vulnerabilities in systems, the vast majority of the time they're doing it responsibly, putting in responsible bug reports, like instead of trying to gain personally from that knowledge, kind of doing the right thing, because at the end of the day, these people have to have jobs and make money too, and the stability of a white hat job is quite attractive, I'd say, compared to the stability of a black hat job. So basically, in order to have a good defense, you need to know like what offense is. So that's kind of the idea of a conference like Defcon, and unfortunately, it gets kind of portrayed badly often by people with limited understanding. That sort of happens with Monero too. So, but on the other side, like a few Defcons ago, the head of the NSA came to give a talk and basically try to recruit people. So I think it goes to show that the perception and reality are oftentimes out of sync. So but for Monero Talk, I'm really glad you're here, because I know that when we chatted about this in the past, you weren't sure if you could make it out to Vegas because you've been like super busy with and this has been a bumper crop for Monero conferences this year. It's like very gratifying to see after so many years of like searching for any sort of Monero meetup and finding like nothing, and now we have like an embarrassment of riches as far as opportunities to come meet each other. So I'm glad you're here. Thanks for your efforts, and we'll be in touch.
Perfect. Thank you. Thanks again.
All right.
Have a good one.
Yeah.